Alright. Good afternoon, everyone. Respected deans, HODs, principals, colleagues, and dear students. I, Dr. Anjali Nagwekar, welcome you all for today's webinar on financial planning organized by School of Chemical Sciences in association with Educational Outreach Committee Directorate of Unnat Bharat Abhiyan. So today's awareness talk, which will be delivered by our guest speaker, Mr. Anup Verlekar, is organized with an aim to apprise the audience on how to effectively achieve personal financial planning and wealth management. Having an expert's advice on optimizing our cash flow and earnings via tax management investment plans is indeed needed to spend less, save more, and achieve financial goals. So, with this objective in mind, it is our pleasure to have today on the stage a certified financial planner, Mr. Anup Verlekar. So Mr. Anup did his BSc in physics at Xavier's College, Mapsa, Goa. He has done Executive General Management from IIT Bombay and has completed his Certified Financial Planner, which is financial planning's highest global standard. He is a member of Goa Management Association and also an international member of Financial Planning Association USA. He has over 10 years of strategic management experience in fields of investment advisory and management consulting. Currently, Mr. Anup is running his own firm, APV Financial, and offers his services in areas of financial planning, wealth management, and corporate consultancy, and has assets of over 200 crores under advisory. He has also started a firm, Small Rupee, which is a social enterprise focused on giving resources to the low-income group people to be financially independent. So with this brief intro, I welcome Mr. Anup for this webinar and request him to take over the stage. Meanwhile, I also request the participants, if they have any questions or comments during the session, please post them in the chat box. Thank you. Over to the speaker.
Thank you, Dr. Anjani, for having me here today for delivering a talk on financial planning. Without further ado, I'd like to start with the presentation. Just wait for some time. I'll share my screen. Is the screen visible to everyone?
No, Mr. Anup.
Are we good now?
Yeah, it's fine now.
Guys, I've been dealing in financial consultancy for over last 10 years, and what I have observed is how actually people have been making investment decisions, and there is a gap between how actually it is to be made. So I have made a simple presentation by uh, involving some pictures as to exactly how it is to be done, and I've divided the presentation into three parts as how we are doing it, how we should actually go about doing it, and there is a small topic on a term called as mental accounting. So before I start with the presentation, I would like to give you one calculation. So if you all are having a pencil and pen or pen and paper, please note down these numbers, which I will ask you at the end of the session. So numbers go by this: 2 into 3 multiplied by 100 multiplied by 365 and multiplied by 20. So the value of which,
Sorry, Mr. Anup.
yes,
I think your slides are not moving.
no, I'm not showing the slides at the moment.
Okay, okay.
So I've given a calculation now for which we'll take up the answers and discuss it at the end of the session. So how we are currently doing our investment planning. Generally what happens is that as soon as we are done with our studies, graduation, post graduation, we end up with a job or we start doing business, and as soon as we know, as soon as others know that we have started earning, there will be some people who are into financial distribution business of financial products. They will approach you and say, hey, look, Mr. Mrs., this is a product which will give you good returns and you should invest over here. And also it will offer you tax benefits. We just we are not aware exactly what product is what, how it's going to be, whether it's going to be actually beneficial for us or not. We are not aware about it because all our life since KG till graduation, post graduation, we are not formally taught about investment planning. It just when we uh, come into the employment scenario, we start thinking of it that okay, I have to buy a car, I have to buy a house, I have to do planning for our studies. So now let me move on to the slides. So always everyone is running out of time to manage their personal finance. It just because somebody else is telling us this particular product is good or this particular scheme is good or a particular company is giving some amount of decent interest, we go ahead with that. Also, because we are tied up in our professional lives, we don't have time, dedicated time for personal finance. So everyone is busy working hard either to impress or to sustain. Professional life eats up your time and leaves nothing for personal finance. So as soon as we get into our, this I need not explain actually, but as soon as we get into our careers, we are so engrossed over there. Even personally, for that matter, since I've put a plan in place, it's fine for me. Or else I'm actually tied up with something or the other, doing something new in terms of financial space. So same case with the audience or everybody, that they are tied up in their professional lives, doing assignments, presentations, delivering talks, and we don't have a dedicated time for personal finance. and this is our scenario. So now this is our scenario. So just because a friend told investment is made into equity. So last 1 year I've been seeing there are numerous people actually calling me and saying, Anup, the market is going up. Okay, do you advise that I should invest in market? Okay, I have opened a demat account. How much should I invest? Then they say that, oh, my friend has bought some shares of a particular company, say ITC or some Reliance. Just because friend is telling or somebody else is telling us, or fear of missing out, we just buy equity shares. Just because a company was paying high interest rate 18%, a huge amount is invested. So over here I'll give you a live example which is in circulation recently. Now this picture is circulation on WhatsApp for last 2-3 weeks, I think much more, maybe a month or so. And this company is offering around 2.5% interest per month. There are people who have sent me this and saying whether this is whether I advised to invest over here or not. And now this is a next picture which I got in Navin Times around 3 months back. So grow your money risk free. I don't know what they are offering, but they're saying go on based company registered under MCA, invest 50,000 and get interest of around 7,500 per month. Also there is another ad just below it that get weekly 7% interest up to 32 weeks and investment is 20,000. There are so many people fall for these schemes because it is offering higher interest. The catch over here is they will say it is guaranteed interest, and we just go ahead without just doing much checks on these particular schemes, and we tend to invest over here. And ultimately, after around a year or 2 years or so, we come to know that the company is a cheat and we have lost our money. Just because this is the most typical and the most sought after kind of a reason for buying insurance. Just because a relative forced us to buy life insurance, a policy is taken. So this is the most missold product that I would say across the market. I'm sure we need insurance, but not as per others force. We should take it as per our calculations on how much actually insurance we need. I'll come to it later on. Just because our company provided health cover, we don't opt for one. Now what is health insurance? In case there is uneventful hospitalization to pay medical bills, we need health insurance. So sometimes when we are working for private enterprises, even for Goa government is offering that Deen Dayal cover. I guess it is 3 lakh rupees for the entire family. So technically, the covers what they offer, the employer offers is very low. Hence, but hence we should opt for a larger cover. But generally, since our employer has given us, we are quiet about it. Just because a product is named Smart Kit, it is bought. It is seen from India, from a money control survey that there are 35% higher chances of people buying a product when it is named after or something to do with the kids. It's just that our emotional attachment, we tend to buy, I want to do something for my kids or I want to invest on my kids' name. So this is the uh, uh, most enticing catch for people to make investment, and we don't think much whether it is right or wrong. So here we come. Decision in professional lives are taken professionally, but when it comes to finance or other personal finance, why emotionally is the question we should ask for. So if I go to a builder and if I tell them that I'm planning to purchase a flat, we will ask numerous questions as to whether parking is included, whether the society is going to be formed, whether it's going to be sale lead or some share certificates. So these are professional decisions. We take a help of an advocate. But when it comes to making investments, we just go by what somebody else is giving us. That means it may be a mutual fund or any product for that matter, life insurance. So what exactly is financial planning? Now, financial planning is a process of evaluating your current financial position, set future goals, and find ways and paths to achieve these goals. You can think of it as a three-step process. Now, first, we need to identify the reality that where do we stand today? What is my salary? And what are the expenses and what obligations do I have that I have to take care by the way of financial planning? Say at the age of 30, we start a job and we plan to build a house 10 years down the line, or we plan to take a flat, or we purchase a flat 10 years down the line. We might not be able to make the entire corpus of the house or flat, but we will have to at least see that we make some corpus so that we can go ahead for making payment for the down payment of the house before we take the loan. Then the next one is once you get married, or you would want to plan for your child's education or child's marriage. And the most important, other than this, we can take care of the children will take care of their own marriage, or they'll take care of the education also because there are loans available. But most important factor, I personally feel, what people have to focus on today is retirement planning. Because today's generation, whoever has joined the government services post 2004, mostly they come under NPS. They don't have defined benefit pension from the government as what it used to be. So now we have to make provision for the pension. That means we have to create a corpus so that after we retire, we'll get some monthly annuity and we will live by it. We will say that okay, NPS, the funds are getting deducted month on month basis from my salary. Also, government is contributing to some extent, and our retirement corpus is going to be done. But we have to check it now, because there are many. Last 1 year back, there was a case wherein government of Goa only had not deposited the entire corpus of the pension deduction to NPS trust. There are many things like that. So we have to actually make sure that that amount is rightly deducted and it's going there. But before checking on that, we have to check whether we are going to able to achieve that goal of 1 crore and 2 crore. Today it might be a huge amount, sound a huge amount, but whether we are going to able to achieve that goal is the question we should ask. And lastly, we should decide on products as to how we are going to reach that particular goal. Whether we are going to take help of mutual funds, or whether we are going to take help of PPF or bank FDs, as per choice, we have to decide and take it ahead. So now, why financial planning? Now, once it's always better we have a written financial plan. So we need to make a financial plan as to decide and manage our cash flows on month basis. We have to jot down all the expenses, all the major expenses for that matter, how much we are earning and how much we can put aside, or rather how much we need to put aside. That's what we need to make. Second importance of financial planning is timely achievement of goals. As I said previously, I feel retirement is the most important goal one should focus on today. Second would be child's education, and it should be done in timely manner. We cannot delay our retirement because we don't have that particular corpus. So this is why financial planning is important. Third, we need to look at safe returns. As I mentioned in the previous section, it's no point in investing in a company which is just giving you interest of 18% or 20% and you don't know what exactly is what. Secondly, also, I mean by safe returns is we need to identify our risk appetite. Now, what is risk appetite? There might be some people who are okay with volatility. That means if I put 1 lakh rupees today, maybe 6 months down the line, that value of 1 lakh can go down to 90,000, or it can go 1 lakh can become 1 lakh 10,000. But still, we are okay with it as long as we are knowing the product that we have invested is good. For example, a mutual fund which is equity related, it will give you a volatile returns for a short period of time, but over a period of next 10 years the returns are going to be really good. And over last 42 years of Sensex was started in 1979 at 100 points. Today it is around 60,000. So we'll say 100 rupees has become 60,000. The compounded annual growth rate of Sensex over a period of last 42 years is 16.9%. So 17% returns Sensex has given us over a period of last 42 years. But in last 42 years, everybody is aware there were so many scams. There was financial crisis. There was China slowing down. There was Asian crisis in 97-98. Then Harshad Mehta scam in 1992. Then we had Ketan Parekh scam, .com bubble in 2001. But still, Sensex is at 60,000 today after all these events. Imagine me telling you that over next 1 year we are going to see these events. Somebody would definitely say, Anup, look, if these events are going to take place in next 1 year, I am definitely not going to invest. Or rather, if I come to you and say next year it's going to be COVID, which we have seen in 2020, first lockdown on 23rd or 26th March, in March last week, there was a market crash on 23rd of March. So anybody who had invested 1 day prior has lost his investment, or the valuation went down by 10%. But still, if somebody has taken a decision by considering his risk appetite, that is okay with volatility in short span and is okay for great returns over a period of 5-10 years for a long-term goal, then that person has made money. Secondly, you might not want to take a risk also, that you just want your money to grow gradually. There are products like that. Go to PPF, go to bank FDs, go to NSEs, go to time deposits in post office. Now RBI has also started sale of bonds by the way of RBI Retail Direct Scheme. So you can do that. But you need to identify how comfortable you are with money. Now next, as I again pointed out, that insurance being the most missold product. Now, how do we identify how much insurance do we need, or whether we need insurance also is a question. Now, imagine a scenario where a person is having around 10 crore rupees and he is earning a normal salary. Does he need insurance? It depends on his liabilities. So, if he is having a loan of 20 crores, then definitely he needs insurance, at least to cover that loan part, so that in his absence, his family should not suffer. That is the idea of insurance. So there is, for example, today I am earning 10 lakh rupees. So I should not be taking insurance, or I should not insure myself for around 2 lakh rupees. That if something goes wrong, that my nominee, my wife is going to get, or my family members are going to get that 2 lakh rupees and they are going to do with it. Insurance is in make good the loss. The concept of insurance itself is make good the loss. So in your absence, whatever insured amount that you are going to that you have insured for is going to be given to the nominee, and they are going to live with it in terms of in case of unfortunate event happening. So how much insurance do we need? So as a thumb rule goes, generally we need 8 to 10 times of your income. So like if I am earning around 10 lakh rupees, minimum insurance cover should be of 1 crore. Now you will say if the cover is 1 crore, we will have to pay a premium of a heavy premium like around 2 lakh rupees per year or something like that. And Anup, I cannot afford it. That is also a question. But there is something called as pure term plan which is available with all the insurance companies. For 1 crore, you might have to pay a premium of around 10,000 rupees. But the premium what you are paying is not refundable. So over a period of time, whatever you are paying is gone. But you are paying for a larger cover, and it is a it's a backup for a worst case scenario. Imagine everybody has bikes and cars today. A car is worth 10 lakh rupees, we insure it for 10 lakhs. And the value of the car over a period of time goes down, so the insurance cover also goes down. So it is make good the loss scenario. You cannot profit out of insurance. Also, the premium what you are paying for car insurance over a period of time is actually waste. It does not mean that since we are paying it, that the value should go, that we should get it back, or we should bank the car and get it back. I hope all are with me, and if any questions are there, you can post it. I'll answer it at the end. Efficient retirement planning. As I said, today corporations, even the government, is not giving defined benefit on retirement. They are doing a plan called as defined contribution. That means employee has to contribute some, and also the employer is going to contribute some. For NPS, I guess you contribute some amount and the government is going to put equal amount. From, let us say you join at the age of 30 and you are planning to retire at the age of 60, there is going to be some corpus that is going to be created, and that corpus at the end of 60 years you have to give it to a life insurance company, which in turn is going to give you annuity on month basis. Now I'm not discussing any taxation part on NPS over here. We can have a separate presentation for it. But it's like a salary when you are not working to take care of your needs post retirement. So first we should identify actually how much we need, and then we should start putting aside money from day one to achieve it. So over here I had given you a calculation. Dr. Anjani?
Yes.
Okay.
Yeah.
So I give a calculation at the start. So has anybody worked out? We can open it for talks and then I'll continue. So the calculation goes 2 into 3 into 100 into 365 into 20. Has anybody computed it? Anyone?
In the chat box, there is an answer 43 lakh 80,000.
43 lakh 80,000 is the answer in the chat box.
Yeah.
Okay. Okay. So okay. So now I gave you a calculation that was 2 into 3 into 100 into 365 into 20. That is 43 lakh 80,000. Can anybody type what exactly is this? Can anybody share what exactly is this?
There are answers in the chat box.
Yes,
Andrew
yes, yes.
D'Souza says that per month investment you will get 43 lakh 80,000 back. Kiran Davaskar says maybe investment.
Yeah.
Yeah.
So I have typed 2 into 3 into 100 into 365 into 20. So now let me surprise you with this. So as I said, we have to make planning for retirement. So I assume that it is going to be two people, you and your partner, spouse, that is going to be living after post retirement together. So what I have said is 2 into 3 into 100 into 365 into 20. It is not a product. It is just a normal calculation. So what I say is two people, you and your wife, eating 3 times a day, that is breakfast, lunch and dinner. Let us assume for 100 rupees per plate. If I factor in today's inflation rate, it's going to be much higher. This is just calculation for food. We are going to eat it for 365 days of the year. And for 20 years, I'm just assuming that I'm going to retire at the age of 60 and I'm going to say thank you at the age of 80. So this is the value actually we need. We need 43 lakh 80,000 just for food post retirement. Today, if I say this amount, everybody will think that okay, in 43 lakh 80,000 we'll get a flat or we'll get to purchase a land. But see this, that smallest calculation is leading us to a huge figure of 43 lakh 80,000 just for food. So imagine how much amount we will actually need for our other including our other needs like travel, electricity, and after 60 I guess, or after 45 only, nowadays we are having diabetes, blood hypertension, blood pressure. So if we factor in that, I think the amount should be minimum 4 to 5 times. So I leave it there and I move on next. So I have a quote over here: you have got to be careful if you don't know where you are going, because you might not get there. Now, this is a pretty new topic and it's of behavioral finance. So let me tell you one story on as far as mental accounting is concerned. So there was this couple who went to US for honeymoon, and they were staying in a hotel where there was a casino below. So they both go to the casino and start playing. After making bets of $100, $200, $300, they start accumulating. They actually, the bets start coming into their favor, or playing on the roulette, the bets start coming in their favor, and they get a corpus. They win a corpus of around 10 million. So they are so happy. They feel that if they put it more, they will get more. So they put that 10 million on one particular number, and unfortunately, that number does not come up, and they lose everything. So whatever savings or whatever money that they had actually saved, that they are going to continue with their vacation, it's cut short. So they go. They think that they'll go to the room and they'll think over it and take steps ahead. So they go to the room and they sleep while the husband is just thinking. So suddenly something strikes him, and he sees a number 17. So he thinks that okay, now this will come up. So quietly he just takes $5, and while his wife is sleeping, he goes to the casino and bets. To his surprise and to his luck, every time the number 17 starts coming up, and now he earns or he wins around 6 million. So the manager of the casino comes and tells him, look, we don't accept bets of 6 million, it is too big for them. So we'll transfer you to another casino, which is much bigger one, and they will accept these bets. So while he's being taken to the other casino, a huge Rolls Royce comes to take him with 4 5 bodyguards, and he's being taken off. So he goes to the other casino and he bets that 6 million over there. And unfortunately, he loses everything. While he comes back, he is not accompanied by the bodyguards. Neither he comes in the Rolls Royce. He has to take a taxi and come back. He goes to his room, and surprisingly, his wife asks him, honey, how much did you lose? He says, $5. So, what I want to talk on mental accounting is so this is exactly what is mental accounting. It is the tendency to place different values to the same amount of money on depending on how it has been acquired or paid, when it has been acquired or paid, and the effort taken to acquire this. Now you see in our case or in the earlier example, he actually lost 6 million, so he just says $5 because that's his initial value. He could have actually taken and walked away with that 6 million and things would have sorted out. But he says, okay, I just lost $5. Same thing what we do with ourselves is we treat our salary income in a particular way, business income a particular way. But if there has been sudden windfall gains to us, we will start terming it, we might change our lifestyle totally altogether. And sometimes it causes us issues later on if we had to, or rather, if I have a housing loan say of 10 lakhs and suddenly somebody gives me 10 lakh rupees, or by the way of lottery I win 10 lakhs, I wouldn't pay the housing loan. I'll say, okay, I can manage it by the way of salary. But if I had to pay it, I would be debt free. Whereas I tend to spend that 10 lakh rupees on holidays or parties or picnics. So this is mental accounting as uh, placing different values to the same amount of money. Now, what happens with the impact due to the impact of mental accounting? Investors hold on to losing investments. I've seen so many investors who are buying shares in equity markets and the values of the shares go down. They feel, okay, the value has gone half. They'll try to relate the company is good, the markets are down, but they still hold on to losing investments. So first and foremost, we should not be doing that. We should be cutting our losses and investing in the winners, in the companies which are actually good. Investors, there are second class. Investors actually earn less and pay more. If we tend to swipe our credit card somewhere else and we don't pay it on time, though we after the beyond the credit period we don't pay it on time, what happens is that the interest charge is 3% per month, so it is 36% per year. We don't look at it, we just go on with that credit swipe. Bonus shares, as far as this is bit related to equity shares, bonus shares is shares 100 rupee share. If it is 1:1 bonus, the share would be of 50 rupees and you would get 2 shares. It's considered as freebies, but your value remains the same. And also day trading. So day trading, I would give that same casino example over here of day trading. It may work out wonders for you, and if you quit it. But if you just go on doing it, there might be a high chance that you might lose your funds. Now, plan of action to for this. Always pay by cash. So it's categorically it's been seen that now because of the advent of virtual payments or net banking or UPI or credit card, we are making less use of it. But when we tend to pay by hard cash or rather without using a credit card, we actually feel it that something of our own has gone out. So we should always pay it by the way of cash or something from our pocket, that we have that sense of option of thought of sense of ownership. Whenever we are spending big money, we should be very alert. Always sleep over windfalls. Now, if you get some inheritance or you get some lottery, or it's not the case always, but you get some sudden rise, or for example bonus, if you're working and suddenly you get some bonus which was due to you 2 years back or 3 years back, it's a windfall for us. Though it's due to us, it's windfall for us in that particular financial year. So the best action would be, you just invest it somewhere for a long period of time, keep quiet. And lastly, I would say, treat all income equally. Whatever as money front that comes to you, you should treat it equally. Don't treat salary income, business income in a particular manner, and somebody else, whoever gives you money for extra work or something like that, in a different manner. Treat it equally and just sleep over it and invest wisely. So I wouldn't go with this. Thank you. I'm done with the presentation. Any questions you all can ask?
Okay, thanks, sir. Thank you very much, Mr. Anup, for such enlightening talk. Now the session is open for the audience, and I request Ms. Teja Khanolkar to kindly moderate this session.
Thank you, Dr. Anjani. Sir, so I will take up the first question that has been posted in the chat box.
Yeah.
That is by Mr. Rohan Naik. Does term insurance has any benefits?
See, there are various types of insurance products that are available in the market. There will be something called as money back product. There will be something called as endowment product. And then there is term plan. Now, what is term plan? In money back, in endowment plans, what happens? You start putting your money, let us say you are having a cover of 10 lakh rupees in an endowment product. They will say at the end of the term, you are going to get 10 lakh rupees. Also, in event of unfortunate demise, you are going to get 10 lakh rupees. You are going to be paid 10 lakhs rupees to your nominee. So, in this particular product, there are two components. One is insurance, and one which the insurance companies do for you is the investment part. That is how they are able to give you 10 lakh rupees at the end of the term. Now, what is term plan? For the insurance company in a term plan, they are just going to charge you premium which the company is going to give you only the cover. It is like so if we go by the breakup in a money back plan or a endowment plan, the actual premium for your age might be 2 lakh rupees, but the insurance component over here, the premium for insurance component over there would be just 10,000 rupees, whereas rest 1,90,000 rupees is the investment component which you are actually doing. Now in term plan, you are putting around 10,000 rupees only. It's like, and only in case something happens, the premium, the cover is paid to your nominee. So now the question is, what is the benefit or for us? The benefit is, in a small amount per year, you are getting a huge cover, and that is what we actually need. So you keep your investment separate and your insurance separate. I hope I have answered the question. Any?
Yes, sir.
Yeah. Thank you.
So I'll take the second question, that is by Dr. Pranay. He asking that isn't the premium of term insurance increases with time? How is the valuation when a total premium and benefit of term insurance versus life insurance is concerned? for a cover of 1 crore, for example.
Then the premium. Okay, now as far as term insurance is insurance on it's life insurance, and since it is for a specific period of term, it is called term insurance. You can so it's pure insurance, what we call it. Now the premium does not change with time. So if at the age of 30 years, if somebody is taking a term insurance plan worth 1 crore and the premium and the tenure is for 30 years till the age of 60, and if you start with a premium of around 10,000 rupees per year, over a period of time, it will not change. In case of health insurance, it is changing because uh, uh, the cost of medical facilities change, and hence the premium rises over a period of time. But in case of life insurance, since you are entering into a contract today for next 30 years, the premium does not change. So for example, in my personal case, I have taken a term plan of 1 crore for around 10,900 rupees per year, and I have taken it online. So it does not change over a period of next 30-35 years, or whichever term you choose. So to answer your question, the premium of term insurance, whatever 1 crore or 5 crores or even less, it will not change over a period of term, and it will remain same. Next.
Yes, thank you, sir. I have a person raising hand.
Yeah.
I request Kiran to kindly ask the question.
Uh, Hello, Mr. Anup.
Yes.
I have couple of questions.
Yes.
My first question is on no cost EMI. Uh, we have certain facilities like Bajaj Finser and all, wherein we can buy products on no cost EMI.
Okay.
So my question to you is, when we say no cost EMI, we always see they take charge some processing fees.
Yes.
So is it really a no cost EMI, or is it like somewhere the interest is hidden and that is taken from the customers?
Okay. Just a moment. See, as far as no cost EMI is concerned, other than you might have seen, other than processing fee, they don't charge anything. So that actually it is a no cost EMI for the customer. So if you are buying a product of 10,000 rupees, Bajaj Alliance, Bajaj Finserv would say, or the card companies like the Visa or Mastercard, they will say that you paid over a period of, I think it is for maximum period of 1 year or 8 months to 6 months. That over a period of 8 months, if you pay, there is no cost, there is no interest on whatever you have made purchases. Now over here, what happens is that, let us say I am Bajaj Finserv. I would do a tie-up with the company which manufactures the phone. The company will say ki, I will give you this particular product at a lower rate. Or for example, if I plan to purchase a phone of 10,000 rupees, the Samsung company this is back-end calculation what I'm explaining. It's going to the Samsung company is going to enter in an agreement with Bajaj Finserv, and they are going to discuss on a particular price, and the Samsung company is going to give some benefits or discounts to Bajaj. That is the internal part, and Bajaj earns from the company, and hence it is no cost EMI for you. They charge processing fee. The reason being, the EMI card, whenever we are swiping our EMI card, as per RBI guidelines, they have to pay some 2.5% of as transaction charges. So that is why they charge you with the processing fees. Whereas other than that, it is no cost EMI for the customers. There are no hidden charges. The companies do their agreements at their levels. Hence, it is no cost EMI to us.
You mean to say it is beneficial to the
Yes,
people
yes,
who
yes,
are
yes, yes. It is very much beneficial to us.
okay. Now my second question is on NPS. Okay,
Yes,
as we had mentioned earlier. Normally, what happens is when we contribute to NPS, I'm talking about a salaried person
yes,
like us. A certain amount, okay, from our basic salary gets cut every month.
mm,
But what happens is recently it has been observed. Okay, one of my colleague observed that uh, the account when we check, we don't see that amount has been deposited in the NPS account.
yes.
So what is the reason behind that? And neither we have seen the employer contribution.
Okay.
I don't know about others, but this is what we observed in our account. And now it's 1 year. Okay. So we see that our profit is just 300 rupees.
Yes.
So
You don't see, you mean to say you don't see the contribution that you have done, neither you see the employer's contribution, right?
yes, exactly. But
Okay.
every month on the salary slip, we see that amount is being cut.
Yes. Madam, let me explain to you, but don't quote me. It's okay. What has been happening? Let us say if I am the employer, I what I would do, I will deduct 10,000, some X amount from your salary. I will put that my contribution and I will diligently put it to NPS trust month on month basis. Since if it is a government sector, I have seen over last 3 4 years what has been happening is there was a news item also in the newspaper. What they see for government, it is just a book entry, or rather for you on your salary when you say it is deduction, it's just a normal book entry that I've deducted 10,000 rupees from your salary. But whether I'm contributing over there or not, that nobody is asking. So actually, you all should write to the accounts department. I feel Baba asking for the status that last 1 year I have contributed 10,000 rupees per month. That is 1,20,000. An equal contribution should be from your end also. That is total value in your NPS account should be reflecting to like 40,000. So what they are doing, they are just doing book entries that debit and credit, whereas it is not being contributed to NPS trust over a period of time, and that is why it is not reflecting into your account. That is why I feel that people who are under this scheme should monitor their accounts on day-to-day basis, or sorry, rather month-on-month or quarter-on-quarter basis, and ask question to the accounts department as to where the funds are going. So what they are doing is just a book entry for them. So 6 months they are collecting. So 6 months that it will not reflect in your account, in your NPS account or your NPS Tier 1 account. At the end of 6 months, let us say 10 crores is accumulated with the government. So suddenly one day government is going to put that 10 crores and you will get to see your 6 month contribution at one shot at the end of a quarter or after at the end of 6 months. Whenever the government does it, there was a new news item also. If I have it, I'll share it with you offline. But since the government had not contributed, they had to pay some losses also. So the system is actually good of people, the way people should accumulate the corpuses. But the way it has been functioning is wrong. So that is why it is not reflecting in your account. So actually, this question you all should ask the account department. So, so what happens is that I am deducting on your. So let us say I am the employer. I am deducting from your salary, and I'm just keeping quiet. At the end of 6 months, I'm just going to make one investment in your name, which is I feel is wrong because that NPS is a market-driven scheme, and every month-on-month basis, the market is volatile and the valuation goes up and down. So it is to be the day I deduct, it should go that day.
Yes, I totally agree with you because if there is no discipline, okay, in
Hmm.
investing, then we are going to have a big loss. Uh,
Exactly.
yeah, and another thing is I have noticed that every year NPS goes in the ATC.
Yes.
So what happens is on the salary slip they will show that the amount is cut in the last year,
Yes.
But then, because of some reason, they have not entered this amount, and then they will put it in the next financial year.
Mm-hmm.
So what happens is we don't know that, and while filing the ITR, meaning when
Yes.
we are filing the
Return.
tax deduction, sometimes we calculate this year according to the salary slip, according to the this year's contribution, and then we add our own contribution. So
Yes.
that becomes an excess.
Yes.
So that also is in a problem. So I wanted to ask you this particular question, okay, because I had a doubt on that. And yeah, that is all. Yeah, thank you.
Yeah.
Thank you, Dr. Kiran. It is really very good questions from your side, and surely we should resolve this. Thank you, the resource person, also for a very nice answer.
Yeah.
My next question is by Dr. Sandesh. Which mobile app is good for investing in stocks?
See, personally, I do not solicit any means as far as the talk is concerned. I want to be unbiased, and I do not solicit any of the apps which are available in the market. But what I would say is all the apps that are available in the markets, like 5 Paisa, Zerodha, or Grow, or any other app that is available in the market, all are good. And then there is this broker Sherkan. Then there will be broker HDFC, like HDFC Securities, Kotak Securities. There are lots of these. All are good. All are genuine as they are registered with SEBI. In case if anything goes wrong, you can complain to SEBI and they will revert to your issues. Now, every mobile app is going to have its own functionality use as to how it happens, or how you are allowed to trade, or how you are allowed to invest. Then the question while looking for a mobile app is whether what are the charges of that particular app. These Once you check these questions, you can take on any mobile app. But whenever you are doing investments on your own, just do some study as to how to do you want to go about with the investments. Just that we see the hype in the market, we should not be doing the investment. So what I'm suggesting is you can check out with all the apps which are available, and you can start your investment journey. Yes.
Yes, thank you, sir. We have one more question by Dr. Pranay. If I have 1 crore rupees today, and will buy a flat or buying a land be more profitable? Let us say in Panjim or a capital city, 20 years down the line. How do I plan about above in the term gain, in the terms of gain?
Definitely about terms. See, it's a very tricky question. In what sense it is tricky is, first question we need to ask ourselves as to why we want to buy it. Whether you want to buy a flat or land to construct a house, or you want to buy a flat to stay directly over there, is the question what we need to ask ourselves. Now, second thing, if you want to buy a flat or a house, or buy land and construct a house for living in it, okay, that's a separate question altogether. Please go ahead, please buy a flat or a house and do with it for a residential purpose. Now, as far as investment purpose is concerned, everybody has its own take. So I wouldn't advise somebody going and buying a flat of 1 crore so that the valuation goes up over 20 years or 30 years. Now, that 1 crore can be invested in other products also other than real estate. We have to look at the criteria. What we need to look at, the criteria would be whether it is going to be liquid, as to whenever we need, are we going to able to withdraw the money as and when we need it, or are we going to be stuck with the money. So if we don't want the money at all, and this you have allocated only for real estate portfolio, then it is better that we buy some land. The reason being, value of land will always go up. It is an appreciating asset. The value of flat, it is also going to go up, no doubt. But ultimately, the construction becomes older for over a period of 20 years. Then I wouldn't want to stay in an old flat if you plan to sell it and get the value. There will be some people who say, I would get rental income if I buy flat rather than land. So if I buy a flat of 1 crore maximum in an area like Donapaula, how much rental income I would get? Let us say 30,000 rupees per month. 30,000 rupees per month translates to a rental income of around 3,60,000 per year. 3,60,000 rupees on 1 crore investment is 3.6% interest. I think for 3.6% interest, we should not be investing in flat. We will also say that value of flat is going to double in 10 years. So if the value of flat is going to double in 10 years period of time, the interest is around 7.2%. I think for 7.2% interest also we should not be blocking our money for next 10 years. It is rather you do some bank FD or you buy some RBI bonds or invest in some good mutual funds for a period of 10 years. That will suffice. But just to draw a line and answer your question in one word, whether you should buy a flat or land for a period of 10 years or 20 years, then you should go ahead with land. That's what I would suggest. Hope I've answered your question.
Dr. Pranay? Okay, so we have the next question. Do we have time, sir? Shall I ask you the next question? Okay. What is your take on budget 2020 to 23 with categorizing digital assets and cryptocurrency in tax? Could there have been a better alternative or could it be done differently?
Okay, to answer this question, last 2.5 to 3 years, there were numerous people asking me, Anup, I have purchased some cryptocurrency, that is Bitcoin, Ethereum, and some others, and I have gained money. So I've invested, I've put around 1 lakh rupees and I've got a value of around 1.2 lakh or 3 lakhs, 1.3 or whatever gain that I've got. So how do I account it for tax? That's the question what people used to ask. Because whenever two things are certain in life, one is death and one is taxes. So as far as investments are concerned, we should go ahead with taxes. So when these questions used to come up as to I've invested in cryptocurrency and I've made a decent amount of return, what is the taxation that we should be looking at? So that time there was a big question mark on everyone's face, and I used to say that since I don't know there is a dedicated specific tax for it, you should go ahead and pay income. We should account it as income from other sources and pay tax accordingly as per your income. That is what we used to do. Now actually the government has specified income from these activities or digital assets at the rate of 30%. Now as far as take on budget is concerned, I am not a hardcore economist to comment on that, but just in one line, since everybody has been tracking budget over the years, and this budget we have seen there are actually the finance minister has actually not touched anything as far as direct taxes or taxes on salaries or taxes on income is concerned. So it is a clear idea what budget the government has presented. It just they are giving us statement of accounts. The way we just spoke of, we should make our financial planning and our budgeting. The government also has made its own budgeting, and they have not specified anything on specific sectors. Just over here and there, as far as the infrastructure is concerned, the government has touched upon, and they are taking directions on those lines, and some minor corrections as far as taxes they have done. But majorly what the middle class and what salaried class was looking at, they have not touched upon it. So that is a clear symbol that government is just uh, taking the budget as a budgetary activity and not an activity which is going to give you free dose. I hope I have answered the question.
Yes, sir. Thank you. Uh, we will take one question from the student,
Yeah.
Leo Blaze D'Souza. As a student, what are the possible schemes or investments one can do? As a student, he's asking.
Okay. So as a student, there are many schemes that are available for you. It just depends on how much monthly investments that you have to do. Since you are a student, first I would suggest that just go through what investment products are available and what suits you. As a student, if you just want to put, let us say, 500 rupees or 1000 rupees per month aside, go ahead, make an investment in a mutual fund which is equity oriented. Invest in it continuously over a period of time, whichever is possible. Invest, there is a plan called a systematic investment plan in mutual funds. It's not a plan as such, but you are going to contribute month on month basis little amount in a particular mutual fund scheme. It's just like a recurring deposit that you do in a fixed investment product. So there are various products that are available. Just explore. I would suggest as a student, you do a SIP into a equity mutual fund, or if you are a risk averse investor, that means you don't want your valuation to go up and down, you may make a RD which is available in post or bank, and start investing. It's just like keeping your funds aside for a period of time.
Yes,
Next.
sir. Thank you. Any more questions from the participants?
Yes, there is Mr. One Godfrey Gomes is asked. Yes, like you said, there are investments from other assets. Could some deductions be? Yes. So what the government has done as far as cryptocurrency and digital currency investments are concerned, they have said that you are not going to get any deduction as far as the loss on crypto assets is concerned. So that means so generally what happens is that in normal investments, equity investment or property investments, whenever investments are made, and if you get a technical or hypothetical loss at the when you are withdrawing the investment, what happens is that uh, you get a chance to set it off. So that means you have invested 1 lakh rupees and the value at the end of the term you withdraw is around 30,000 rupees. You get to set off that 30,000 rupees from your investment. Whereas crypto assets is, as far as crypto assets, they have not allowed for any such deduction. So I hope I have answered your question.
Mr. Godfrey? Okay. Sir, I have one question
Yes.
from my
Please.
side. The thing is that I suppose I have a child who is 10 years old now,
Yes.
and I want to invest for his education. And as we know, the inflation, the amount for the cost of education is increasing every year. So, how should I plan for his educational investment?
See, first and foremost, you should decide today as to what is the cost of education that he is going to get into today. So let us say if his cost of education today is 10 lakhs for getting into MBBS, or rather MBBS fees is 10 lakh rupees today. So what would it be after a period of 7 years when he gets into when he is of that particular age. So let us say it is 15 lakh rupees. So now you do back testing. So you need 15 lakh rupees in around 5 years. So now you should start the calculation as to how much monthly you have to keep aside. Now, once you get that figure, let us say you have to keep aside around 10,000 rupees per month or 12,000 rupees or 20,000 rupees per month for accumulating corpus of 15 lakhs. Since the goal is around, since your target goal is over a period of 5 to 7 years, it's typically one equity cycle or a long term goal. That's what we term. Just take one equity mutual fund, a large cap mutual fund, and start investing over it. Also, if you have some additional corpus that which is lying idle with you over here and there, or some bonus or increment or something that you make, please go ahead and top it up, invest over there, and you will reach the desired goal. That's what I feel. And just keep, see, first predominantly whenever you all are doing or anybody is doing investments, try to keep it as simple as possible. When I say as simple as possible, it should be easy entry, easy out. Just because property values double or property rises, it's a notional value. Today, if you go to sell a flat which you own, is much more difficult because you don't get a buyer. On a real time basis, you don't get a buyer. It will be like around 2-3 months time that you look for a buyer and sell it. Whereas if you invest in a product like a mutual fund which is very liquid, you can invest today and withdraw tomorrow, or RD or something. As per your risk appetite, you should go on investing. So first calculate what corpus you need, then you go with the product. If you are a risk averse investor, go with RD. If you can handle volatility, and I am sure over a period of 5-7 years you will get very good returns, jump into a large cap equity mutual fund and get going with the things, and keep it simple. So you can withdraw at any point of time, you can increase the investment any point of time, but stick to your plan and I am sure you will achieve your goal. I
So,
hope. Yes.
yes, sir, thank you. Just a supplementary question to
Yeah.
that is, since we are not very financially literate, so is it advisable if people like us go through, these agents who help us invest in mutual funds, or is there any hidden charges
No,
or?
no, there are no hidden charges over there. There are no hidden charges there, and you can approach them. So we can connect offline if you have any questions on this. I think I have
Yes,
my number. I'll put on the slide.
yes, sir. Yes, sir.
It's
Yes, sir.
all there.
Thank you very much.
Yeah, well,
Yes, sir. Thank you. Thank you.
we're done.
Any other participant? Do you have any questions? Or if there are no more questions, I request Dr. Anjina to kindly take over from here.
Thank you, Ms. Teja. Thank you, Mr. Anu. I now request Dr. Kiran Dauskar to kindly propose the vote of thanks.
Thank you, Anjani, for giving me this opportunity. First of all, I would say a very interesting and informative seminar by Mr. Anup Verlekar. And I totally agree with him that, when we are kids or when we enter college or later on, also we are not, taught about this particular topic, or we are not much aware about the financial planning, or financial literacy is actually missing in most of us, which is actually very, very important in today's time. We only learn it when we get employed somewhere and when we have to pay tax and we get into that ourselves. So by that time, like, these complex terms, they come across and there are so many things, mutual funds, these, that we get so confused that we tell the other person to do it. And the best example is filing the income tax return. I myself have done the mistake where I used to earn around 6 lakh per year and I have paid the tax of around 25,000, which could have been avoided if I was a financially literate. So I feel the today's session would be very informative, And I think as Mr. Anup said that he is also will be available offline to all of y'all if y'all have more queries. And I really thank him for this particular informative session. So thank you very much, Mr. Anup Verlekar.
Thank you, everyone.
Yeah, thank you. Over to you, Anjali.
Yes. We end this session now.